Good evening, everyone. I'm Jerry D'Ambrosio, Manager of Educational Content here at VectorVest, and welcome to this week's special presentation. Technical analysts use support and resistance levels to identify price zones on a chart where the likelihood favors a hesitation or reversal of a prevailing trend. And psychology plays a huge role as traders recall past price behavior and react to changes in price direction to anticipate future market movement. And before we dive headfirst with some examples, what is support and resistance? Well, support is the price area under the market where buying pressure overcomes or equals selling pressure. It's where demand is deemed strong enough to support the stock from falling any further. Price reaches support, it begins to rise or move sideways maybe for a little bit. Resistance is the price area over the market where selling pressure overcomes or equals buying pressure. It's where supply is deemed strong enough to resist the stock from rising any further. And when price reaches resistance, it begins to fall or move sideways. And a key point here is that support and resistance are more so zones than specific price levels. And successful retests indicate the strength of the support and resistance zones. So how do you use support and resistance in your trading? Number one, let's talk about the buying opportunities. If you see price hitting a support level and bouncing off of it, that's bullish. Typically, price will continue to rise until it reaches the next resistance level. So when you see price bouncing off support, that's a buying opportunity. The other buying opportunity is when price breaks through a resistance level, especially on higher volume. Remember, we already said that there was that built-in selling pressure around that resistance level. If a stock is able to overcome that and bust through that resistance level, that's very bullish, and that would indicate a buying opportunity as well. And second, you can also use support and resistance to indicate when to sell an existing long position or to initiate a short position. So if you see price hitting resistance and begins to move back down, that's bearish. Typically, it will continue to fall until it reaches the next support level. So if it's a stock that you own, you should consider selling it or taking other defensive actions when you see price retracing from resistance. If you don't own the stock, it would indicate a possible shorting opportunity. And additionally, if you see price breaking through a support level and moving lower, that's a bearish indication. Typically, price will continue to fall until it reaches the next support level. And a little later, I'll show you how you can use VectorVest to automatically find stocks exhibiting these patterns. So let's take a look at some examples. Here's MMC. And back here in March, April, May of 2009, you could see the stock had a hard time continuing its upward momentum. It reached this price level here of about $95 and change a number of times. 1, 2, 3 times, 4 times before breaking out through that resistance level and moving a little higher. So selling pressure overcame buying pressure, and that battle, essentially, that tug of war, raged on until right about May, the middle of May of 2019, where eventually buying pressure overcame selling pressure and the stock broke out above it. Now, when a stock breaks out above resistance, that resistance level becomes support. And you'll see many times price will tend to come back and retest that support level. And you could see it did at the very end of May. Price came back down, retested that support level before retracing from it. Okay, you got a little bit of a pullback, but now you're in a nice uptrend. Higher highs, higher lows, and then July of 2019, you're having a hard time here breaking through that about $103, $104 price level. One retracement off of this swing high, another retracement off of that same level, that initiates a resistance level. Selling pressure overcomes buying pressure. The stock falls. Remember what I said earlier about if a stock retraces from resistance, typically it will continue to fall until it reaches the next support level. This support level just doesn't go away after price retraces from it. Price settles into that support zone, retraces from it. Comes back down to retest it. You got a successful retest, retraces from it, another successful retest, before eventually, remember, one side is always going to win, the bulls or the bears. That tug of war happens right at support or resistance. Sellers give up. The bulls take control, push the stock price higher until it reaches that resistance level again. Selling pressure eventually overcomes buying pressure, and the stock retraces from resistance only to see it settle in once again to that support level. You got a retracement off of support and then a really quick crash right back down to retest it again. October of 2019, you got a nice retracement and you can see where it settles in. Again, it's not a specific price necessarily. It's more so a zone. And you could see where the hesitation occurred after the retracement off of that support level. The hesitation occurred at that resistance level once again. Eventually, buying pressure overcame selling pressure, and the stock busted through that resistance level only to move higher. Here's another example, GPN. So we'll look back here on the left-hand side. Here's May, June 2019. Little hesitation right in that zone before the stock breaks out above it. Reaches a price of about $170, pulls back, and then price stops in August right at the same level where we saw a hesitation back here in June. Retraces from that support level, and we get a retest. So let me talk for a second about how to manage trades that you take off of these levels. So for example, August of 2019, price, for all intents and purposes, retraced from support. So you may have taken that trade, only to see the stock fall a few days later and come back to retest. In the past, you might have panic sold and said, oh boy, I've only been in this stock a couple of days and it's crashing on me already, I'm just going to get out. Well, hopefully, after tonight, you're better equipped to manage the trade a little bit more effectively. And the reason why I say that is because you took the trade based off of a support retracement. You now have that cushion, that support level where you know that if price reaches it again, it may in fact retrace from it. If it doesn't, if it breaks down through support, we talked earlier about what to do, right? If price breaks down through support, that's bearish, and that should indicate a selling opportunity. Well, you know what? Price didn't break down through support here at the very beginning of August. It retraced from it again. It retraced from it. It continued to rise until it reached that resistance level, and then a subsequent retracement where now is the time to take your trade off the table. Take your gains off the table if you see price retracing from resistance off of a trade that you initiated off of a support retracement. Price comes down. I said that price will typically begin to fall until it reaches the next support level, which it did. Price retraces from support. I would say it enters into that zone again. Remember, it's not an exact price point, but it is more of a zone. The high of that day there, that red candle there, the upper wick, the high of that day, I would call that in that zone. You got a retracement from that zone and another successful retest of support. So that's one retest, two retests, three successful retests of that support zone. If that's a trade that you initiate, where does the stock stop rising again? It stops rising right at resistance and retraces from it. Eventually, buying pressure overcomes that selling pressure. Price breaks out through resistance, eventually comes back to retest what's now support. Remember, when price breaks resistance, it becomes support. Price reaches that support zone and then retraces from it. Here's MSCI. So we have a really strong resistance right up here, right at about $245 or so. Price didn't move any higher at the end of June, failed to move higher once again at the end of July. So you got a resistance level that's being established there. Stock price falls. Where does it stop? It stops at the same level that it stopped back here in May of 2019. So there's a successful retest of that recent low. Price retraces nicely off of that support level. That may indicate a buying opportunity. You take that long position. Where does it stop? It stops at resistance. It retraces from it. Selling pressure overcomes buying pressure. Stock begins to fall. You take your long position off. If you are a little bit more aggressive, you like to short stocks, that would indicate a shorting opportunity. If you do take the position short, price falls. Where does it stop? It stops at support. Price retraces from support. What do you do with that short position? You cover that short position. Remember, retracement off of support is bullish. If you're in a bearish trade, that's an indication to cover that short position. Price rises. Maybe you take the position long again, only to see it come crashing down and retest support again. But again, you're better equipped moving forward to know that just because the stock price falls 1 or 2 days rather sharply, you took the trade based on a successful retest of support. Use that support level as your line in the sand. It's literally a line on the chart where if price moves below it, that's an indication to cut your losses, move on to the next trade, but it doesn't. It successfully retests again, rises. Where does it hesitate? So that battle, right, that tug of war occurs again at resistance. Price breaks out through it, buying pressure overcomes selling pressure and continues to move higher. Let's look at one more. Symbol is J. This is a building heavy construction company. So here back in May, June 2019, you see that battle, right? You see that tug of war. 1 retest, 2 retests at resistance. May and June of 2019. So selling pressure is overcoming buying pressure. The bulls are having a hard time breaking the stock's price through that, looks like $81 level. Eventually they do. Eventually one side is going to win. When price breaks out through that resistance level, that's bullish. It rises to a new high in July, comes crashing back down to retest support. Again, price breaks out through resistance. That resistance level becomes support. Many times you're going to see a retest of that support level, which we do. A subsequent retracement off of support, a retracement off of resistance, a retest off of support again, and the stock is just channeling now, bouncing back and forth between support and resistance. So you got a real battle going on here in a rather narrow channel. That's about $81 to $86. That's a $5 channel on an $80 stock. That's only about a 6% channel there. That's a very narrow channel. There's your retest of resistance again. A little bit of a pullback. I'd say that's more of a hesitation or a pause in that resistance zone, only to see the stock break through that resistance level again. Where does it come back down? It comes back down to retest that support level, only to retrace from it, hitting a new high, comes crashing down, retests support again, and now you're in a channel again, but it's a much wider channel. You're looking at about $86 to about $100. So that's a $14 channel on an $80 to $90 stock. That's a much wider channel than 6%. So this is, of course, looking historically. I wanted to thoroughly go through how to react to retracements from support and resistance and breakouts through support and resistance. One thing to keep in mind, just because price hits support doesn't mean that you should go out and buy the stock right away. You want to see price retracing from support. That battle needs to be won by the bulls before you take the trade long. And the same thing goes for a stock that reaches resistance. Just because it reaches resistance doesn't mean that you have to go out and sell the stock if you're long the trade. Because why? Because eventually price can break out through that resistance level. It doesn't always necessarily retrace from it immediately. It could hesitate or pause in that resistance zone before breaking out through it. So you want to wait for that selling pressure to eventually overcome the buying pressure and retrace from resistance before you exit the trade. So now let me show you how to automatically find these situations. So I'm going to go into the VectorVest program, and I'm going to go into our Unisearch tool. And within our real-time program, we have a tool called ProTrader. Now, ProTrader is an add-on to those who don't have VectorVest real-time. And in the views tonight, we included a link to take out a free trial to the ProTrader tool. Within the ProTrader tool, we have many technical analysis searches. You can search for moving average crossovers. You can search for MACD crossovers. You can search for relative strength index crossovers, stochastics, ADX, envelope crossovers. And we have searches that look for all four of these situations that I just went through. Price breaking resistance, price breaking support, price retracing from resistance, and price retracing from support. So I'm going to run the search called retracing from support by 2%, but I'm going to modify this search slightly. Instead of retracing support by 2%, I'm going to click on that box there, and I'm going to lower that number to 1. It's a little bit more aggressive. What I'm looking for is price retracing support by only about 1%. So I click on OK, and I'm going to add another line parameter here. Instead of looking at all 8,000 stocks in the database, I'm only going to filter by the S&P 500 watch list. So I'm going to go stock watch list. Remember, I went to stocks, filter by watch list. That watch list is going to equal, and then I'm going to select the S&P 500 watch list. And I'm going to run the search. And we only have a handful of stocks. We only have 5. Now here is the edge that you as a VectorVest subscriber have. The list is sorted by RT descending. So RT measures the short-term price trend of the stock. And you might be wondering, well, if price is retracing from support, that means that it's recently fallen and bounced off of a support level. So why would I sort by RT descending? Well, let me show you the charts. If I go to graph, I've added the support and resistance lines on the chart. All you got to do is go to add parameter, technical analysis, select support and resistance, and check the box. And I'll also add RT to the chart. So if I just zoom in here, you can see price as of yesterday moved higher. It retraced from that support level of 67.48. Now, I don't like this one personally. There's too much congestion at the current market price. I don't have a lot of upside. If you really think about it, there's resistance at 69.54. The stock's at 68.21. Here's another resistance level if I pull this out further. So I don't have a ton of upside here. So this is not a search where you just blindly buy the top stocks that come up in the list. You do a little cherry picking. I don't like this one. What I do like, though, is that the relative timing indicator is above 1. Means the stock is in an uptrend. So here's the retracement off of support, this support level at about 140.13. There's the 1% retracement. I think we're a little bit too close to resistance, though, to take the trade right now. But I do like how RT is above 1. Again, here's Digital Realty. This is a REIT. This support level here, it looks like about 123 and change is where the retracement occurred. A little too much congestion here. I'm not really seeing a clear retracement. This one's a little better. Here's EXPD. Now I know RT is below 1, but the RT level is moving higher. You could see that RT has established support right at about 0.82. And it's this support level here, I'll pull it back even further, of $73.10 where we're getting our retracement. You can also say that 72.47 was a successful retest as well. Now we have some decent upside here till about $75.80. So this trade looks a little better. What I'm essentially looking for is at least a 2-to-1 ratio of initial profit potential to my initial stop loss. Remember, if you're going to take a trade based on a support retracement, your initial stop loss should be at support. And maybe your initial profit objective is at resistance. It's this one, though, that I like. Now, the RT is low, but what I'm seeing here is a divergence. RT is creating a higher low. You can see these higher lows that are being created with RT. So let me take off RT for a moment and just talk about why I like this trade the most. Look at that support level at $340.35. Congestion, retracement, congestion. Look at that congestion there. Couple of retests, right? Couple of retracements off of that $340.35 support zone. You eventually had a nice bullish retracement, and then where are we now? We are once again retesting a very significant support zone. I like this one because if the stock's price moves higher today, look at where my upside is, $373.44. That's resistance. That's the last level of congestion we saw in December of last year, January of this year. My floor is tight. If the stock goes above the high of yesterday, $345.87, I take the trade. I have a very tight floor there at $340.35. That's a $5, let's call it $6 potential loss. Whereas my upside, I'm looking at a potential profit of closer to $18. So I like that ratio. That's about a little more than a 3-to-1 ratio. So using these support and resistance searches, go through the charts. Remember the examples that I showed you earlier. Those are the ideal examples. You want a clear prevailing trend in one direction or the other, a strong retracement off of a support level, for example, that has been retested a number of times in the past. It's these congestion areas here where I like to stay away from. When you have lines on the chart, support and resistance lines on the chart that are so close together, it doesn't make for a clear or easy decision. You're too close to resistance to take the trade. You got too many support levels that are surrounding the current market price. Give yourself at least a 2-to-1 ratio. Profit objective to initial stop loss, and I think you'll be in good shape. Well, folks, I hope you enjoyed today's special presentation. Have a great weekend, everybody.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.